All right. Time to really dig into all this investment research you sent us.
Wow.
It seems like you're
Wait a bit.
really aiming for some maximum returns in 2025.
Uh-huh.
And you've got reports here on everything.
It seems like.
From AI startups to pieces of Picasso's.
Yeah, it's a very
Talk about variety.
interesting mix, and it seems like you're not afraid to explore some of the more unconventional avenues.
Right.
What really jumped out at me was the heavy emphasis on tech.
Yeah.
We're seeing AI, renewable energy, cybersecurity.
Right.
I mean, it's like you got a roadmap here for the future of the economy.
Yeah. Well, it's interesting because the sources point to some pretty specific niches within each sector. Like, there's a company developing AI-powered EV charging stations.
Right.
Like, that's the kind of detail that gets me excited.
Well, and what's so fascinating about this company is that they're not just simply betting on the EV boom. They're anticipating the need for intelligent charging infrastructure to manage the strain on the power grid.
Yeah.
It's a clever play
I know.
on a second-order effect of the electric vehicle revolution.
See, that's the kind of insight that I was hoping for. It's not just about picking the obvious winners.
Right.
It's about understanding those deeper trends
Yes.
and finding the hidden gems.
Yeah.
But before we go all in on tech, the research also highlights the importance of diversification.
Absolutely. Real estate's always a solid contender.
Okay.
But instead of just traditional property investments,
Yeah.
your sources delve into some more intriguing alternatives, like real estate crowdfunding platforms.
Yeah.
Have you looked into those at all?
I've heard of them, but to be honest with you, the idea of being a landlord, even virtually, just doesn't really appeal to me.
Right.
I think I'm more drawn to the idea of passive income without the hassle.
Yeah, well then maybe REITs might be more your speed.
Okay.
They offer a way to invest in real estate
Right.
without having to deal with the headaches of property management.
Yeah.
And actually, your research mentions some REITs specifically focused on these high-growth tech hubs,
Okay.
which aligns nicely with that whole tech-heavy theme
Right.
that we're seeing.
I'm starting to see how all these pieces fit together now.
Yeah.
But what about commodities?
Okay.
That's one area I've always found a bit mysterious.
Commodities are really the building blocks of the economy,
Yeah.
and your research actually suggests
Okay.
some pretty interesting plays for 2025.
Okay.
Gold and silver are always reliable safe havens during times of uncertainty.
Yeah, those are the classics.
Yeah.
But my research also mentions lithium.
Okay.
With the EV boom in full swing, it seems like a smart bet.
Yeah, and it goes beyond just EVs.
Okay.
Lithium is really crucial for battery storage in general, which is essential for the growth of renewable energy.
Okay.
Your research even highlighted a company that's developing a new lithium extraction technology that's supposed to be much more sustainable and efficient. It's really a fascinating intersection of tech and resource management.
So not just investing in the raw material, but in the companies innovating within that space.
Exactly.
That's like a double whammy of potential return.
Right. And that brings us to a point that's clearly important to you.
Yeah.
ESG investing.
Yeah.
It's more than just a trend now. It's really becoming mainstream.
Well, I'm glad to see that.
Yeah.
It's good to know that my investments can reflect my values.
Uh-huh.
But beyond just, feeling good,
Right.
does the research actually make a strong case
Right.
for ESG's financial performance?
One study you included showed
Okay.
that ESG-focused funds have actually outperformed traditional funds in recent years.
Wow.
And it makes sense when you think about it.
Yeah.
Companies that prioritize sustainability and good governance are often more resilient
Right.
and better positioned for long-term growth.
So it's not a choice between doing good and making money.
Right.
You can actually do both.
Exactly. And your research even dives into some very specific ESG-focused ETFs that are making waves. One in particular is focusing on clean water technologies.
Yeah.
Another smart play on a resource
Yeah.
that's only going to become more valuable in the coming years.
Okay. I'm adding that one to my list.
Sure.
Now let's talk about something that always gets my heart racing.
Okay.
DeFi.
Mm-hmm.
It's a bit of a Wild West out there, but
Yes.
the potential returns are hard to ignore.
Yeah. And your research dives into some of the more advanced DeFi strategies that are gaining traction, like yield farming and liquidity mining.
Okay.
These are high-risk, high-reward plays.
Right.
But for someone like you who's willing to explore the cutting edge,
Yeah.
they might be worth investigating.
Definitely intriguing, but I also see a lot of warnings about risk.
Yeah.
Is there anything in the research about mitigating that volatility?
One suggestion is stablecoins. They offer a way to participate in the DeFi ecosystem
Right.
without being exposed to the wild price swings of Bitcoin or Ethereum.
Mm-hmm.
Some experts believe stablecoins will actually play a key role
Right.
in making DeFi more accessible
Okay.
and stable for the average investor.
It's like having a safety net within the DeFi circus.
Right.
That makes me feel a little better about dipping my toes into those waters.
Yeah.
But before I get too carried away with all the high-tech stuff,
Okay.
the research also reminds us
Yeah.
that the best investment is often in ourselves.
This is a point that I think often gets overlooked.
Mm-hmm.
But what's the one asset that appreciates in value throughout your life?
Right.
Your knowledge,
Yeah.
your skills, your experience.
It's true, but with so many courses and resources available,
Right.
it's hard to know where to focus.
Yeah.
Does the research offer any guidance on that?
One suggestion is to invest in skills
Okay.
that complement
Mm-hmm.
your current strengths and interests. For example,
Yeah.
if you're already tech savvy,
Mm-hmm.
perhaps a course on blockchain development or AI ethics
Mm-hmm.
could give you an edge in the job market
Mm-hmm.
or even spark a new business idea.
I like that. It's about building on what you already have
Yeah.
and finding those areas where your passions and the market's demands intersect.
Exactly.
Mm-hmm.
It's not just about acquiring random knowledge.
Right.
It's about making strategic investments in yourself
Right.
that'll pay off in the long run.
Uh-huh.
And your research even suggests some specific online learning platforms
Right.
that are known for their high-quality content and industry recognition.
All right. I'm definitely going to check those out.
Yeah.
This deep dive is already opening up so many possibilities.
And we've only just begun.
I know.
There's a whole world of investment opportunities waiting to be explored,
Yeah.
ready to dive deeper.
Yeah, let's do it.
It is exciting to think about all these different avenues, right?
Yeah.
But it's also important to remember that building a successful investment portfolio isn't just about picking the hottest stocks
Right.
or jumping on the latest trends.
Yeah. You're right. It's easy to get caught up in all the excitement.
Yeah.
And forget about the bigger picture. The
Mhm.
research keeps mentioning this idea of a personalized investment strategy.
Right.
But what does that really mean?
Well, it means taking a step back and looking at your investments holistically,
Okay.
considering your individual goals,
Mm-hmm.
your risk tolerance, and even your values.
Okay.
It's about creating a portfolio that's not only profitable,
Right.
but also aligned with who you are
Right.
and what you want to achieve.
So it's not just about maximizing returns. It's about maximizing returns in a way that feels good and makes sense for me personally.
Exactly.
I like that.
And one of the foundational principles of a personalized strategy
Okay.
is diversification.
Mm-hmm.
We've touched on this already,
Right.
but it's worth emphasizing. Spreading your investments across different asset classes helps to mitigate risk
Okay.
and create a more stable portfolio.
Okay. Diversification, got it.
Yeah.
But doesn't that limit the potential for those big outsized returns?
Not necessarily.
Okay.
Diversification isn't about playing it safe. It's about strategic risk management.
Okay.
Think of it like a basketball team.
Okay.
You need a mix of players
Mm-hmm.
with different strengths and skills to win the game.
So some players are your high growth tech stocks.
Right.
Others are your steady real estate investments. And maybe you even have like a wild card on the bench,
Exactly.
like a speculative bet on a new cryptocurrency.
Precisely.
Okay.
By diversifying, you're not putting all your eggs in one basket.
Right.
If one investment underperforms,
Yeah.
others can pick up the slack.
Okay.
And within each asset class, there are further opportunities to diversify.
So even within tech,
Right.
for example, I wouldn't just buy Apple stock. I'd look at smaller companies, maybe even international tech firms
Exactly.
that are under the radar.
That's a great example. And your research even talks about the potential of emerging markets.
Okay.
Particularly in Southeast Asia and Africa, there's a lot of innovation happening in those regions, often at a fraction of the cost of investing in Silicon Valley.
That's definitely an area I need to explore further.
Yeah.
But I also want to circle back to this idea of aligning my investments with my values.
Uh-huh.
We talked about ESG,
Right.
but how do I know I'm actually making a difference and not just falling for some greenwashing marketing scheme?
That's a valid concern.
Yeah.
There's a lot of noise in the ESG space right now.
Right.
But your research suggests looking beyond the labels
Okay.
and digging deeper into a company's practices.
Mm-hmm.
One resource you included even offers a rating system
Okay.
that evaluates companies based on their actual environmental and social impact.
So it's about doing my due diligence, not just trusting what a company says.
Exactly.
But looking at their track record and holding them accountable.
Exactly. And don't underestimate the power of shareholder activism.
Okay.
As an investor,
Yeah.
you have a voice.
Mm-hmm.
You can engage with companies, vote on proposals,
Right.
and even divest from companies that don't align with your values.
It's like putting my money where my mouth is.
Right.
Literally using my investments to support the kind of world I want to see.
Exactly.
I'm starting to feel like an ESG superhero.
Well, maybe not a superhero.
Oh, boy.
But certainly an informed and engaged investor.
All right.
And that brings us to another important aspect of investing,
Okay.
understanding and managing risk.
Yeah, that's the part that always makes me a little nervous. How do I find that balance between chasing those potentially high returns
Right.
and protecting myself from big losses?
It starts with understanding your own risk tolerance.
Okay.
How comfortable are you with the idea of your investments fluctuating in value? Are you willing to ride out the dips in the market in pursuit of long-term gains? Or do you prefer a more stable, predictable approach?
I'm not going to lie. The thought of losing money keeps me up at night.
Sure.
But
Yeah.
I also don't want to miss out on potential opportunities.
You don't have to.
Okay.
There are ways to manage risk without sacrificing returns entirely.
Okay.
Diversification, as we've discussed, is one key strategy.
Right.
Another is to invest for the long term.
So not trying to time the market
Exactly.
or jump in and out of investments
Right.
based on short-term fluctuations?
Exactly. History has shown that the stock market, despite its ups and downs, tends to trend upwards over time.
Oh.
By taking a long-term perspective,
Yeah.
you're essentially riding out those short-term storms and allowing your investments to grow steadily over time.
That makes me feel a little better. It's like remembering that the roller coaster eventually comes to a stop
Right.
and I can just enjoy the ride.
And don't forget about the power of dollar cost averaging.
Right.
This strategy involves investing a fixed amount of money at regular intervals,
Okay.
regardless of market conditions.
So even if the market is down,
Right.
I keep investing the same amount, which means I'm buying more shares at a lower price.
Precisely.
Yeah.
It's a disciplined approach
Right.
that helps to average out your purchase price over time
Okay.
and reduce the impact of market volatility. And your research even suggests some specific robo-advisor platforms
Okay.
that utilize this strategy and can help automate your investments.
That's a great idea. It takes the emotion out of it and
Yeah.
lets the algorithm do its thing.
Right.
But even with all these strategies, I still feel like I could use some extra guidance.
Okay.
The research mentions financial advisors,
Yeah.
but aren't they expensive?
Not necessarily.
Okay.
There are different types of financial advisors,
Right.
ranging from traditional fee-based advisors to online platforms that offer more affordable advice
Right.
and portfolio management services.
So I could get some personalized guidance without breaking the bank.
Exactly.
That's good to know.
And don't underestimate the power of self-education.
Right.
There are countless books, podcasts, websites, and online courses available
Right.
that can teach you the fundamentals of investing and help you develop your own investment philosophy.
It's like taking control of my own financial destiny.
Right.
Becoming my own personal finance guru. I like the sound of that.
And it's an ongoing process.
Right.
The world of investing is constantly evolving,
Right.
and the best investors are those who are continuously learning and adapting.
It's like a lifelong adventure, exploring new investment opportunities,
Yeah.
refining my strategies, and constantly striving to improve my financial literacy. Speaking of which, the research also talks about the rise of online businesses and fractional ownership as interesting avenues to explore.
Those are definitely areas worth considering.
Okay.
Online businesses offer the potential for scalability and passive income,
Right.
while fractional ownership allows you to invest in high-value assets like art or real estate with a smaller amount of capital.
It's like democratizing access to investments
Right.
that were previously out of reach for the average person.
Exactly.
But these are also areas that require a different set of skills and knowledge.
Absolutely.
Yeah. Right.
Your research emphasizes the importance of thorough due diligence, understanding the risks involved, and carefully evaluating the platforms and opportunities available.
Right.
It's not just about jumping on the bandwagon.
Yeah.
It's about making informed decisions
Right.
based on research and careful consideration.
So it's back to that idea of investing in myself.
Exactly.
Not just financially,
Right.
but in terms of knowledge and skills. The more I learn, the better equipped I'll be to navigate these new and exciting investment landscapes.
Precisely. And that brings us back to the core of what we've been discussing today.
Okay.
The importance of a personalized investment strategy. It's not about following a one-size-fits-all approach.
Right.
It's about crafting a plan that's tailored to your unique goals, values, and risk tolerance.
And it sounds like the key to crafting that plan is a combination of diversification, strategic risk management, staying informed, and continuously investing in my own financial literacy.
Exactly.
Anything else I should keep in mind as I start putting this all into practice?
One final thought. Remember to enjoy the journey.
Okay.
Investing can be exciting, challenging, and rewarding. Embrace the ups and downs.
Right.
Celebrate your wins.
Yeah.
Learn from your mistakes.
Right.
And never lose sight of your long-term goals.
Wow. It feels like we've covered
I know, right?
a lot of ground,
Close.
from AI startups to fractional Picassos.
Yeah.
But I'm really starting to see how all these pieces fit together
Right.
into a personalized strategy.
And that's the key takeaway here, right? There's no magic formula.
Right.
No single right way to invest.
Right.
It's about finding what works for you, for your goals, and for your comfort level.
It's almost like we've been building a
Yeah.
custom suit, tailoring each element
I like that analogy.
to fit perfectly.
Yeah.
But even with the best tailor, you still need
Right.
to try it on, see how it moves,
Yeah.
make adjustments.
Right.
What would you say are some of the essential fittings
Okay.
we need to do with our investment strategy?
The first fitting, I would say,
Okay.
is revisiting those goals we talked about. Not just the financial targets, but the deeper why behind them.
Right.
Are you aiming for early retirement, funding a passion project, leaving a legacy?
Yeah.
Connecting with that deeper purpose
Right.
can really fuel your motivation and help you stay focused
Yeah.
when the market gets a little bumpy.
It's like having a North Star to guide you, especially when those short-term fluctuations tempt you to stray from the course.
Exactly. The next fitting is all about risk. We talked about diversification and dollar cost averaging,
Right.
but it's also about honestly assessing your own emotional response to market swings.
Okay.
Can you stomach a 20% drop in your portfolio without panicking? If not, maybe dialing back the risk a little bit is a wise move.
That's where that self-awareness comes in.
Exactly.
You know, knowing yourself, your strengths and your weaknesses,
Right.
even your emotional triggers, is just as important as knowing the market.
Absolutely.
Right.
And speaking of weaknesses, let's be honest,
Yeah.
none of us are experts in everything.
Right.
That's where knowing when to seek help comes in.
Okay.
Maybe you're a whiz at picking tech stocks,
Uh-huh.
but clueless about bonds. Don't be afraid to consult with a financial advisor or a tax specialist to fill in those knowledge gaps.
It's like building a dream team for your finances. You know, you have your own expertise,
Right.
but you bring in specialists when needed to strengthen
Exactly.
the overall strategy.
That's a great analogy. And just like any team,
Yeah.
communication is key. Make sure you're having open and honest conversations
Right.
with your partner, your
Right.
family, or anyone else who's impacted by your financial decisions.
Yeah.
It can prevent misunderstandings
Right.
and really keep everyone on the same page.
It's like having a family board meeting where everyone shares their financial goals and concerns.
Exactly.
It might not always be fun,
Right.
but it's essential for building that shared vision.
Now let's talk about that final fitting.
Okay.
And this is perhaps the most important one. Staying informed.
Right.
We're bombarded with financial news and advice 24/7.
Yeah, it is a lot.
How do you cut through the noise and find the signal?
That's a challenge I definitely struggle with. It's so easy to get overwhelmed and either tune it all out
Right.
or get sucked into the hype cycle.
Your research actually highlighted some interesting strategies
Okay?
for staying informed without losing your sanity.
Okay.
One is curating your information sources.
Okay.
Identify a few trusted experts, publications or podcasts.
Right.
Those whose insights really resonate with you and align with your investment philosophy.
So it's like building a personalized news feed for your finances, filled with voices you trust
Exactly.
and insights that are relevant to your goal.
Precisely.
Yeah.
And remember,
Yep.
it's not just about staying up to date.
Okay.
on the latest market trends.
Right.
It's also about deepening your understanding of the underlying forces
Okay.
shaping the economy.
Mm-hmm.
Read books,
Yeah.
take courses, engage in thoughtful discussions.
Right.
All of these contribute to building your financial wisdom.
It's like going beyond the headlines
Yeah.
and understanding the why behind the market's movements. It makes you a more informed investor.
Yeah,
And honestly, a more informed citizen in general.
couldn't agree more.
Mm-hmm.
And one last thought on staying informed.
Okay.
Don't be afraid to challenge your assumptions.
Mm-hmm.
Seek out diverse perspectives,
Okay.
even those that might make you a little uncomfortable.
Mm-hmm.
That's how you avoid getting stuck in an echo chamber
Right.
and make truly informed decisions.
This has been an incredible journey.
Yeah, it has.
And I feel like I've not only gained valuable knowledge, but also a renewed sense of confidence.
That's great.
I'm ready to take all this information and
Yeah.
turn it into action.
And that's the most important step of all.
Right.
Remember,
Yeah.
knowledge without action is like a seed that never gets planted.
Right.
So go out there,
Yeah.
put these insights into practice, and start building the financial future
Okay.
that you envision.
To all our listeners out there, thank you for joining us on this deep dive.
It's been a pleasure.
We hope you found it as insightful and inspiring as we have.
Yes.
Remember, the power to create your financial future lies within you. Now go out there and make it happen.